Welcome to The Power of Tax Defense Attorneys, Tax Corner with Juda Gabaie.
Hello and welcome to The Power of Tax Defense Attorneys, Tax Corner with Juda Gabaie. I am your host, Kevin Rosenquist, and today's episode is all about navigating hardship, unpacking tax relief options. Juda, welcome back. It's good to see you.
Thank you so much, Kevin, for having me on.
Absolutely. So, for someone facing significant financial distress, what exactly is the hardship status within the IRS framework?
Okay, great question. The hardship status is actually a temporary granted program by the IRS. It's actually called a currently not collectible status. And what that means is that you don't have the ability to pay the government your current taxes back, right? So you have a liability with the IRS and you're not able to pay it back right now. So what the government says is, hey, we understand your severe financial distress. And what we'll do is we'll pause the collections effort, and let you, work on your own finances. It's not a permanent solution. People can be in hardship status for many years, but generally the IRS, puts individuals or businesses in a hardship status for about 2 years, and they may come back and review the financial to determine whether this taxpayer could afford another resolution or not. Generally, when you're in this hardship status, the government will seize all collections. You generally tend to file a lien, but they pretty much seize the collections such as levies, garnishments. They'll stop all that. But interest and penalties will still continue to grow, and future tax refunds may be applied to the outstanding tax liabilities. But hardship status can be a great resolution because you're also buying yourself time on a 10-year statute of limitation with the IRS, because the IRS only has 10 years to collect on the debt. So taxpayers could be in a hardship status for 10 years and then let the statute of limitation run. There are exceptions to the statute of limitation, but it's definitely possible to be in a hardship status for quite some time.
Is it a fairly unique situation?
It is a unique situation. It all depends on your finances and your assets and the current situation you're in. The government will take a look at your financials. They will take a look at your expenses, your monthly expenses. They'll take a look at if you have any assets, and there will be a determination based upon that.
In your experience, you've been doing this a while now, what are the most frequent and compelling life events or financial crises that typically lead individuals to pursue a hardship status?
So there are a few. From my experience, it tends to be for example, income decreases, you lose a job, or you have some sort of severe illness or medical crisis or disability, or sudden increase in living expenses. But there are, the most common one tends to be where one spouse lost income or the income got decreased tremendously. That tends to be, or also happens with individuals that have fixed income, or a business that has lost a large contract and no longer has that contract anymore. It's not able to keep the payment the way it should be in order to pay the IRS. So that tends to put them into some sort of currently not collectible status, a hardship status.
When a client approaches you with such a situation, like where they're thinking that they might want to do a hardship status, what is your process? How do you figure out if it's truly the best path for them?
So what happens is like this. One of the first things that we do is we do a power of attorney, and we have them fill out a financial. Once they sign the power of attorney, we'll gather up all the information with the IRS. We'll find out what the tax are, what the penalties are, what the interest are. Have they filed all their tax returns? What we'll also do is we'll make sure that they're in compliance. And the most important thing is we'll also take a look at the statute of limitations, see how much time there is left for the government to collect on the debt. Once we have that information, then we will discuss their financial. The financial is what's going to help us to determine, is the currently not collectible status, the hardship status, the best option for this taxpayer? And that would all depend on the income and the assets. Sometimes individuals have assets with a lot of equity in it, and they could tend, if they sell that asset, they could pay off the government, but it may not be the best option. It might be better to get into a hardship status, tell the government, hey, look, this asset that I have, I live in it, I have nowhere else to go. The hardship status is the best option at this point because this is what my income is. And that could be an option, but it all is going to boil down to the statute of limitation and the financial.
Are there certain influential elements that the IRS is really going to scrutinize as they consider, when they're evaluating this request?
There are a few, and usually, besides the financial, is going to be assets, and is going to, it could be possible that the taxpayer has some sort of exceptional circumstance in terms of a health crisis or a medical issue going on with a family member, and there are expenses associated with that, which would result in no disposable income to pay the government. So that would be, that would be an option. Another one, the taxpayer may have an asset, but they can't get rid of it, and their overall, income is not high, and they have no choice but to try to get into this currently not collectible hardship status. But there are a few things that the government will take a look and scrutinize, and usually that's the financial and assets.
Would that be the priority? So if they're gonna prioritize one thing over everything else, is financial assets what it is?
Yeah, I would say financials are one of the most important things that the government will take a look at.
Yeah, which makes sense for
Right.
sure. Tax relief. There's a lot of misinformation in this world for sure.
Yeah.
What are some of the most pervasive or damaging misconceptions that individuals often hold about hardship status? And how do you, as an expert, help them navigate these misunderstandings and ideally set some realistic expectations?
Right. So there are a few. I would say the biggest misconception is hardship status means any tax debt that I have is forgiven and it goes away.
Mm.
And perhaps that's probably the most damaging misconception because currently not collectible hardship status does not forgive your debt. The debt is still there, it remains. Interest and penalties, in fact, continue to accrue, and the IRS will still capture any future tax refund. Is just a temporary pause on active collection efforts. And that pause can be there. Generally, it's there for 2 years, but it could be extended, and it's possible that you could be in this hardship status for many years until a statute expires. But the main misconception is that a hardship does not it's not a forgive. Your taxes are not forgiven, are
Hmm.
not away. And then probably the second misconception that I would say is if I get a hardship status or a currently not collectible status, I never have to deal with the IRS again, and that's not necessarily true
Wouldn't that
because
be nice?
yeah, it would be really, really nice. But the IRS will tend to periodically, ask for your financial, and sometimes they may not even do it because when they take a look at your tax returns in the future, they'll see what your income is. Okay, it's understandable for this person to continue to be in this, currently not collectible status, and sometimes by filing a future tax return that shows your income went up, the government will say, this taxpayer's financial has improved. It may be wise to take a look and see if they can afford a different resolution. So that's a very those are the two main misconceptions that I would say people, taxpayers have when it comes to currently not collectible status, or as we call it, the hardship status.
Do a lot of people, or maybe not a lot, but do you find that people will come in saying, "Oh, I want to apply for hardship status," and you look at their financials and you're like, "Oh man, you're not going to apply. You're not going to win this one. You have too much. Like you're not as much
All,
of a hardship as you think you are."
all the time, right?
Yeah.
Taxpayers, unfortunately, have a very high expectation because you hear a lot of radio ads, you hear a lot of advertisement. Oh, we could, settle pennies in the dollar. We can
Yeah.
get your taxes taken care of. And it's unfortunate because, once we take a look at the taxpayer's financial situation, then we can make that determination of, what resolution they actually qualify for. And that's important for taxpayers to understand, because you have to realize the government is not in the business to incentivize taxpayers not to pay their taxes and then come
Right.
around and do a hardship status or currently not collectible or offer and compromise. But getting a tax professional, they're the ones that have the know, they're experts and they know which resolution would be best for you and going through your financials and all that. And I think that's very important, that proactive strategy in that.
What are the most common procedural pitfalls or maybe documentation hurdles that clients typically encounter during this process, and how can you help them overcome the obstacles?
Right. I think one of the most difficult ones to navigate the hardship status or any resolution with the government is an incomplete or inaccurate financial. I'll give you an example that I was just working on just yesterday. And that was where we applied for a resolution with the government, and the government took a look at our financial, and one of the last things they asked us, everything looked good, and they said, Judah, we have over here that the taxpayer may have another bank account. Can you find out if this account is still there? And if the account is still there, can you get some more information and let us know, because it wasn't on the financial. We speak with the taxpayer, and the taxpayer tells us, I don't have that account. And we go, okay, but they're saying that you do, and this is the account number. And she calls us back. She goes, I opened this account for one of my kids 20 years ago. My kid was underage, and I opened an account for them, but we never changed it. And that account is not even, I don't even have access to it. It's my kid's account. My kid now is in his 20s, and that's what's going on. And that's a problem, because the government sees an account under your name, but they don't know that your kid is using it. It's just, all they see is under your name, and that's going to be an issue. And that's the thing, is that when you do these financial, you got to be very transparent. You got to have everything there. It's got to be complete to the full. And then that's number one. Number two is you want to be very proactive, and we talked about this a bit. Is that you want to make sure that everything that's reported on the financial could be cross-referenced to the bank statements, the pay stubs, the bills, and all that. That's important, because you're asking the government to put you in a currently not collectible status, or an offer and compromise, or in a small payment plan. They want to take a look. They want to verify that the income and expenses are what they are. And then another thing is that the most common pitfall could also be the failure to file all the required returns. In order to get into any resolution with the IRS or the state, you have to be filed. You got to be in a resolution with them. That means you got to be in all the returns got to be filed. You got to make estimated tax payments if you're continuing to owe year after year, because you want to show the government that you're stopping the bleeding and that you're not going to owe moving forward. So they want to see those, estimated tax payment. But that's, the overall, those are, some of the pitfalls that taxpayers go through. One last one that I would mention is what's allowed as an expense and what's not allowed as an expense. And the
Ah,
government has set a standard for every single county, depending on how many people live in that household. They have set a standard of what the allowable expense is. And the reason they do that is because they don't want individuals, businesses, or regular individual taxpayers to take a huge expense for a housing. If you're one person and live in a household, they'll say, okay, you're entitled to this amount because you live in this county. They're not going to give you five, six, seven, $8,000 for one person. So that's probably one of the hardest pitfalls, is to bring your expenses back into line with the standard. And that's something that, the government will take a look at. Now, there are exceptions where, we can deviate from the standard. But that's something that, you'll have to take a look at with the professional, with your tax professional, and then submit the documents to the government to get some sort of understanding whether, if they're willing to move forward with the hardship status.
shifting to strategy, what are the absolute must-haves or game changers when preparing a client's case for hardship status to truly maximize the likelihood of approval?
So I would say the must-have is that I would probably do is have a financial with backups organized and ready to go. and probably put some sort of letter, a cover letter, to provide to the government just the facts of the case and why this taxpayer qualifies under the Internal Revenue Manual for this currently not collectible status, this hardship status. I think that's very important, as it will build a case as to why the government should accept your currently not collectible status.
Are there any specific types of evidence or maybe even a narrative framing that you have found to be particularly persuasive to the IRS?
Yes. So the narrative phrasing is essentially, you want to take the taxpayer's financial income and expenses and tell the government why there's no way the taxpayer is able to make a payment to the government at this point is because they have no disposable income. Here is his income, here are his expenses, and the expenses are reasonable, and you'll explain it as to why they're reasonable. You'll also show documentation if needed. If there's a medical, there's some sort of medical expense, some sort of expense that it's not within the standard and why the government should consider it. But providing a comprehensive report of documents and a narrative put together, it is very important to have the government say, okay, we agree, we'll go ahead and put this taxpayer into a currently not collectible status.
Beyond the immediate relief, which is obvious, are there any unexpected consequences or perhaps lingering considerations that clients should be aware of maybe regarding financial future?
Yes. So whenever you apply for a currently not collectible status and you're granted that status, there are a few things that taxpayers should be aware of. One of the first thing is the government wants to file a lien to protect their interest. A lien, it usually attaches to real property, and that's what the government wants to secure their interest.
Sure.
That's number one. Number two is that the interest and penalties continue to accrue. But in an individual or a business that already has, hundreds of $1,000s of tax liability, I mean, adding a few more $1,000s is not going to change it.
Right.
That's number two. Number three is that if you have any refunds, the government will capture the refund.
Yeah.
And I think overall the most important thing is that when you're in a currently not collectible status, you're buying yourself time on the statute of limitation. There are many taxpayers that I have dealt with over many, many, many years that generally, I've seen their tax liability expire because they've been in this currently not collectible status. Their financial situation did not improve, and the taxes expired. In fact, yesterday I was working on a client's case, and next week the liability expires because they've been in a currently not collectible status for quite some time. So there are pros and cons, and that's something where the taxpayer should speak with a tax professional and see which resolution is best for them.
All right. Well, good stuff for sure. Thanks for listening to the Power of Tax Defense Attorneys Tax Corner with Juda Gabaie. To connect with Juda and the team, visit reliabletaxattorney.com. And don't forget to leave us a comment and subscribe to our channel. We got lots more information coming your way. Juda, really nice chatting with you. Thanks so much for all the insight.
Thank you, Kevin, for having me.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.